Welcome back. Crypto funds had a second straight week of outflows as Bitcoin became more sensitive to interest rates and investors adjust to the Federal Reserve's hawkish turn. CoinShares reporting that crypto funds had 97 million in net outflows last week, 73 million of which were Bitcoin-related outflows. Trading volume of Bitcoin funds was at half of the yearly average, echoing the shrinking overall Bitcoin trading volume. And the dollar index, or DXY, which tracks the greenback's value against majors, refreshing two-year highs and taking the month-to-date gain to 2.5%. The global reserve currency has risen 12% since May of 2021, according to TradingView data. The DXY may see further gains as this monthly chart shows the two-decade bearish trend line has been breached to the upside. Delphi Digital saying, quote, that USD strength is one of the biggest headwinds for markets, including BTC and crypto. Right, joining us now to discuss BTC price is Michelle Schneider, managing partner at trading strategy firm Market Gauge in New Mexico. Hi, Michelle. So, taking a look at Bitcoin, it's been on a sideways trading range lately, but over the weekend we did see it go as low as 38,000, now back up to 41,000. What's going on?
Well, I think I was just talking with you a couple of weeks ago, and I feel like, we can sort of just play back that tape, how we've been consolidating in the zone. And until we break down under 38,000, it looks pretty good in this consolidation phase. And more importantly, it's being accumulated by the whales on every dip. In terms of the on-chain metrics, every time we see this buying, it's also being met with a decline in the balance of Bitcoin that are sitting in the exchange reserves. And so that's a factor as well. So the demand and the real world use cases continue to emerge in this industry. So we're still looking at it from a long-term standpoint of very bullish. But of course, looking at the charts, right now, what's interesting is we want to go really, really near term. Even though there's resistance up from 42 to, let's say, 46, we get an hourly close, which happens to coincide with the closing of the day today, over 41.5 in Bitcoin. I think we would continue to see that as bullish. And, of course, we'll look at these other areas. But I think it's just building steam.
When we also see that Luna is also surging. Is now the third largest stablecoin in the market. They're buying up BTC in their reserves, but that hasn't had as much as an impact on price as much as, say, Tesla buying Bitcoin of last year, in which Bitcoin suddenly went to all-time highs. And so I wonder what you think the impact of stablecoin compared to corporate buying and putting Bitcoin in their reserves.
Well, I think it's extremely bullish, again, that Luna is, first of all, it just made new all-time highs a few weeks ago at $119. And right, what we're seeing now is they're buying blockchain protocols like Bitcoin and even Avalanche in order to bolster their own network. So this is very bullish. Is it mainstream? No, I think most people don't really even know what Luna is. When I say most people, I'm saying people that aren't really watching the crypto space as carefully as your audience might be. And that would be a part of a reason. But I think that Luna right now has great potential and could possibly go back up to that 119 and even higher. And of course, again, that should only be helpful to Bitcoin and possibly even to Avalanche.
Okay. We're also seeing macroeconomic factors such as the war in Russia, tightenings are very, very disorganized supply chains, central bank tightening the balance sheet. So I wonder what you feel that impact will have on Bitcoin in the short term.
Well, we keep waiting for that great decoupling, right? I mean, there's been a couple of charts that have floated around that gold has been the safety play while Bitcoin now has been more sensitive to the tightening, to the QT that the Fed is talking about. Although now in the last couple of days, yesterday, for example, where equities went down after Bullard talk, today we have Evans talking, and yet Bitcoin yesterday already started to separate itself from the overall market. So, yeah, I mean, from a macro standpoint, standpoint, it's extremely confusing right now. But I think even though the long bonds are actually still down today, the high yield bonds are still down today, it seems to me like what you're looking at, let's say if you look at NASDAQ, besides Bitcoin, would be probably the most interest rate sensitive. They're anticipating that the Fed may not be as hawkish as all that, which of course is kind of bizarre, makes you wonder whether they really have a handle on inflation. I think they still believe that inflation is transitory. So if we put all that aside, if they aren't as hawkish as one would think they might be over the next course of, let's say, this meeting and the one after that, I think that will be extremely bullish for Bitcoin, extremely bullish even for the precious metals as well for different reasons other than the safety play. So yeah, it's the Ukraine war. It's like people have very short-term memories and they don't seem to even think that that has an impact. And because there's been some stats that have come back that supply chain is eased, say in North America, they're not really looking at the fact that it's going to get all cramped up again in China because of the shutdowns they've had there. So it's like, top in commodities, everything is over, everything's fine. But I think that's going to come back to bite people. And yet it could be that Bitcoin actually ignores it.
All right. Lots of green in the future of Bitcoin, coiner Michelle. Thanks for joining us.
Thank you.
That was Market Gauge Managing Partner Michelle Schneider.